You're listening to AI PRISM from Seoul Economic Daily.
It's Monday, May 18. I'd like to share some thoughts about retail investors. So the Korean stock market, the KOSPI, just shattered records by crossing the 7,000 milestone. You'd really think it would be pure celebration right now.
Right. Yeah, you really would.
But beneath the surface, retail traders have just quietly placed a 24.6 billion US dollar bet. That is 34.49 trillion won. And they're betting that the whole thing is about to crash. For anyone with Korean market exposure, you need to understand what these traders are seeing that the rest of the market is just, completely ignoring.
Exactly. And the vehicle they are actually using for this bet is, it's fascinating. They poured that massive amount of capital into a leveraged inverse exchange traded fund. In the Korean market, they use the slang "gupbus" for this. Basically, it's a fund designed to double your money if the top 200 Korean stocks drop.
Right, so it's a huge short position.
It is, but here's the catch. Because they bought into this while the market was rallying past 7,000, that fund actually lost 31%.
Wow, so losing 31% during a historic high. I mean, that is brutal. It's like buying a wildly expensive hurricane insurance policy while there's just not a single cloud in the sky.
Exactly.
To double down on a short position like that, they must see a massive storm coming. And it looks like the storm is brewing right at the top of the index, Samsung Electronics.
Right, so Samsung is facing its first ever general strike threat on May 21. It all comes down to a dispute over profit-sharing bonuses. The union wants a formula paying out roughly 32 billion US dollars. That's 45 trillion won.
Okay, that's a huge gap from what management wants.
Right, because management is drawing a hard line at about 28.5 billion US dollars, or 40 trillion won. And the clock is ticking on a one-day production halt that could cost the company 714 million US dollars.
Which is 1 trillion won in direct losses, right?
Yes, exactly. 1 trillion won in direct losses, just for one single day.
Wait, I have to push back here, though. You're citing these massive daily loss numbers, but under Korean labor law, the government can step in with emergency arbitration for critical industries like semiconductors.
They can, yes.
And that literally bans a strike for 30 days. So doesn't that government safety net essentially make this a non-issue for the market? Like, why panic if the government can just hit pause?
Because, well, arbitration is just a pause button. It's not an actual fix. It prevents an immediate factory shutdown, sure, but it exposes a glaring vulnerability. We're talking about a company that is foundational to global AI infrastructure.
Right, they make the memory chips everyone needs.
Exactly. If they can't align their internal governance on basic profit sharing, how do they maintain their aggressive edge in advanced chips?
I see. And this leads to an even bigger problem for you as an investor to watch. If a massive strike actually happens, or if operations just grind to a halt, a company usually covers that sudden loss of revenue by tapping into the debt markets.
Right, they just borrow to bridge the gap.
But right now, that backup parachute is full of holes. Corporate bond issuance in Korea just dropped 16.5%. It fell to 35.8 billion US dollars, or 50.07 trillion won. That is the first time we've seen a drop in 4 years.
Yeah, the bond market is freezing up because of what we call shadow tightening. Even though the Bank of Korea is holding its official interest rate steady at 2.5%, the actual yield on a 3-year government bond has surged well past 3.765%.
Break that down for me. Why are the rates companies actually pay going up if the central bank isn't really doing anything?
Well, because the banks and investors lending the money are getting nervous about inflation and future risks, so they are demanding higher returns right now. Just to give you an idea, a 25 basis point hike adds 3.2 trillion won, which is 2.3 billion US dollars, to household interest burdens.
Oh, wow. That is heavy.
Yeah, so the market is choking off the economy without the central bank even pulling the strings. It's making it drastically more expensive for Korean companies to borrow money.
So companies are getting squeezed from both sides. Internal labor costs are threatening to explode, and their external borrowing costs are quietly surging before the Bank of Korea even makes a formal move.
Which brings us right back to that $24.6 billion bet against the market. If borrowing costs keep eating into earnings and labor unrest actually disrupts production, that expensive hurricane insurance is going to pay out massively.
Yeah, that suddenly makes a lot of sense.
But here is a new thought for you to consider. We focused heavily on the Korean index today, but Samsung is the backbone of global AI hardware.
Absolutely.
If their production actually stutters due to this unprecedented labor friction and rising borrowing costs, what happens to the supply chains of every major tech company around the world relying on those exact memory chips?
That's today's AI PRISM. retail investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.